Kia ora. Welcome to Shared Lunch, brought to you by Sharesies. My name is Susanna Batley, and I'm the General Manager of Sharesies Business. In today's episode, we'll be talking to Mark Owe, CEO of Chorus. We'll be talking about the huge potential that digital infrastructure can offer Aotearoa, as well as what's next for the telco. Before we get started though, here is some important information.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Hi Mark, welcome to Shared Lunch.
Thanks, Susanna. Thanks for having me.
I'm really excited to get into this conversation about Chorus. But before we do that, I'd like to start with you, Mark. You've had over 2 decades in the industry across the UK, Australia and Aotearoa. And you've also had previous roles as CEO of 2 Degrees, as well as CFO of Vodafone New Zealand, which is now One New Zealand. So what first attracted you to the sector and why have you stayed there so long?
It's fast-paced. I enjoy technology and I enjoy change. But I think what's really kept me in the industry, both overseas and coming back home to New Zealand, is that ability of connectivity to truly shape and enable better futures, and it's helping to shape the way that we live from an intergenerational impact, and I love that. Generally for the better, you'd say.
Quite a few people that have worked at 2 Degrees talked about how much you took that purpose approach to the organisation. 2 Degrees obviously in the B2C space, in the retail space. How does that change being at Chorus and as a B2B player?
Yeah, look, I mean, purpose for cause is something I'm really personally passionate about. I have 5 children, so I want to leave this place in a better state than when I joined it. And 2 Degrees was such an amazing place to be able to put that foundation of a core purpose in there. And that was around fighting for fair to make New Zealand a better place to live. Right? And that was the key challenge, that decisions that the business was taking, if it wasn't making New Zealand a better place to live, then we should stop it. And that's the whole beauty of purpose, when it actually builds some momentum and that you can truly drive positive societal outcomes. And so we're trying to do the same thing in Chorus now, but albeit coming from a slightly different perspective. And we talk about unleashing potential through creativity and enabling better futures for Aotearoa. And again, I think that goes back to my view of what's kept me in the industry as well, and being able to improve lives and help shape them for future generations. And whether you're in a B2C or in your B2B space, the ability of large enterprise to actually drive positive societal outcomes is really material.
And the origins of Chorus was that it was originally spun out of telecom, which, for those old enough like myself, remember, is the former Spark. Could you talk a bit about why Chorus started, why it was spun out of Spark or telecom back then, and then also a bit about the business today?
Sure. I mean, you go back to 2008, and that's where the first proposals were to bring high-speed fibre connectivity to the majority of New Zealand. And back then you'd recognise there was a fair amount of pushback to doing this, but actually you had a small group of visionaries that really pushed for that change and had the courage and the persistence to keep doing it when actually very few markets or countries around the world were even doing that. And it was premised on creating an open access platform and network built off a public and private partnership, which I think we could all recognise now and looking back that this is probably one of the most successful examples of private and public working together in partnership to deliver now what is an amazing network by global standards. And we bat well above our weight, you would say, from a New Zealand perspective. You're right, it was spun out of telecom as it was, for those old enough, and I certainly am. But that was essentially so that telecom could actually compete as part of the UFB, the ultra-fast broadband initiative. And so it spun off the retail arm, which we know today is now Spark, and the wholesale arm of actually building, running, managing, maintaining the fibre networks into what we see as Chorus today. And, and that's where we see ourselves today from a retail to a wholesale perspective. We are the wholesale partner of the fibre network and also copper, but we're getting out of copper. Fibre is the gold standard that you would look to. But our roles around that ongoing investment, maintenance, running the network, working with the retail service providers, the RSPs as they're known, to provide the products, the plans and the network essentially that they then are selling into market from a retail perspective.
And just going into those retail sellers or resellers that you work with, you've obviously worked for them before, running 2 degrees and at Vodafone New Zealand or One New Zealand, as we mentioned at the start. Do you see them just as partners, or are they starting to become competition as well? How does that dynamic work?
Well, look, competition is definitely alive and well. I think today we have 5G fixed wireless. And 5G is a very different product to 4G from a wireless broadband perspective. And there's competition in market now for some of those fibre customers. And to be clear, there is a market for multiple broadband technologies. We're seeing that advent with Starlink and the LEO satellites as well, and the exit progressively from dated legacy copper technology. But yeah, they are our partners. We work with them. We work through them to actually grow our own fibre customer base. But equally, yes, recognising they are also competitors.
A Deloitte report earlier this year stated that the digital fibre network has the potential to bring in $33.2 billion to the New Zealand economy by 2033. What do you see are the potential barriers to us being able to realise this sort of benefit on this scale?
Yeah, and it was a great report from Deloitte, and actually that $33 billion by 2033 is just the annual benefit. When you're actually looking at the cumulative benefit between now out to 2033 is actually over $160 billion of economic benefit. And I think, again, that's a testament to that vision back in 2008 to actually bring this network to New Zealand. Some of those barriers, so the first is probably around coverage and expansion of fibre. So today we sit at just over 87% of our population that are covered by fibre. So 13% the country aren't. We'd see a definite use case to grow that fibre expansion out to 95%. Because of New Zealand's topography and geographic dispersion of the population, probably doesn't, the economics don't work beyond 95%, but actually, that's one of the leaders and drivers to getting to recognise that economic benefit is being able to expand it. Today, New Zealand ranks 17th in the world for fibre uptake, which is quite an amazing stat for a country with 5 million people. And again, the topography that we have to actually build this network. But we've got to stay at the forefront of that. Those visionaries put us out there when other countries and markets really weren't looking at this. That same ranking, if you compare that to Australia, they're at 55th. The UK at 66th. So it's nice to be on the right side of those for a change, but expansion's one. Digital equity's another. So ensuring that no one's really left behind from this digital world. Today, the government statistics would estimate 1 in 5 people across Aotearoa are actually digitally excluded, which is roughly about 10% of households. That seems like a staggering statistic, particularly when you consider that we're increasingly becoming more digitised. So services like core government or retail services or access to health services, they're becoming increasingly digitised. So the risk to being digitally excluded is growing, if anything. So I think those are the 2 key ones. And the third I'd call out is having appropriate regulation. Whether that's to new products like fibre or it's to legacy products and being able to have a pathway to exit from those like copper. Regulatory frameworks need to encourage investment and promote competition, not stifle it. And I think we've got some work to do in that space.
Yeah, great. And I'd like to circle back on those on that question of whether the regulatory framework is appropriate right now. But on those first 2 points on ensuring that the economics work to increase that coverage to whether it's 95% or whatever that number is, and also that social equity point, how do you think about those economics? Because with a new subdivision, for example, I imagine that the economics can look really good because, as I understand it, most of the cost of installation is in digging those trenches and putting that piping in. And with a new development, you're already doing that with electricity and plumbing and all those other infrastructure requirements that new dwelling requires. And also, you're probably getting high connectivity rates as well with a new development like that. If you compare it to a small rural town where you might get lower connection rates, and also the cost is higher, the marginal cost, because you're having to dig up and do that. But obviously, to your point, from a social equity point of view, it's really, really important that people are connected and given those second order effects as we're distributing healthcare and all these other services digitally. How do you think about that, and how do you sort of balance those objectives?
Yeah, so from a new subdivision development, so we think about that as MPD, as our new property development, and it's something that we work well in across New Zealand, all the fibre areas that Chorus is involved in. And yeah, look, you're absolutely right. Where the fibre is already existing, and that's the beauty of fibre, and why it's so scalable, because you're not having to go out and dig up the trenches and change out all the infrastructure every 5 to 10 years. It's actually changing out the equipment at either end. So thinking about the exchanges at one end and the exchange cards, the things that become the enablers, or in our homes, our households now, where we have the little white box on the wall, wherever it might be, and that's called the ONT, the optical network terminal. So it's really scalable, and that's the beauty of fibre. But the costs of delivering fibre, when you move outside those fibre areas and you're building new infrastructure, they become exponentially greater. And, you can think about an urban example and maybe take my street as an example, and say there's 50 homes in the street and they all have a 3 metre setback from the road. We can have a high degree of confidence around the costs of those, and think about the uptake as well. In a rural context, though, that same kind of area might have one premise and it's 500 metres setback from the road. And as great as fibre is, it's these things still cost. So the exponential rate of cost versus the returns that we're getting, those economics actually become a lot less attractive to do that. Which is why we then try to work with government around new frameworks that would either mirror or evolve from the original UFB program to actually take fibre further, maybe to that 95% of the population. And interesting at the moment, the government's focus and vision around the infrastructure priorities plan and having that 20-year vision, we'd certainly hope that that has a nod to fibre deployment and repeating the scale and benefits of what we saw out of the original fibre program, and actually taking that to the next 7%. Right? And that same Deloitte report you referred to earlier, that recognises going from 87% to 95% population coverage, that's the equivalent of $17 billion of economic benefit to bringing fibre and high-speed broadband connectivity to those regions. Part of whom are going to need to find a solution for digital equity or inclusion. They tend to be the groups like digital seniors, lower income households or families, Māori and Pacifica, or peoples with disabilities. They tend to be the groups that are disproportionately digitally excluded, and yet, ironically, are the groups that would benefit the most from actually being involved in this digital world. So it's not just expansion, as we say, it's that digital equity and ensuring that no one's really left behind.
You've come to the end of a very large period of CapEx, or capital expenditure, building the fibre network that effectively replaces the old copper network. What actually happens to the copper network?
Our first challenge is actually having a pathway to exit from copper, and this is something that we've pushed with the government and regularly discuss with both government and the Commerce Commission. We need a pathway to exit from legacy technologies that are no longer fit for purpose. There are better alternatives already available, and if I talk to that for a second, the Commerce Commission themselves recently published a report looking at the non-fibre areas of New Zealand, so that 13% of the population. Mm-hmm. And 97% of those premises can already receive an alternative to copper technology, so either a mobile or an alternative wireless provider. That's before you overlay Starlink and satellite services.
Yep.
Right? So there are already alternatives. So we need to be able to find a pathway to exit from copper. It can't be something that just goes on indefinitely. It's something that, as Chorus ourselves are saying, that these networks are not fit for purpose. Right? There are better alternatives available, so let's get out of it. And for a dollar spent on copper is not the most efficient or effective use of that dollar spend. You'd prefer to put that into other investment that's going to better the country. So that's our first challenge, is to have an exit to copper. And then the second is thinking about, well, what's the ability for us to recover that copper or extract it? Not all copper is created equal. There's large gauge, medium gauge, small gauge copper, and it's not as simple to actually get it out of the ground either. So, but there are use cases actually, and you see that around the world, of companies actually moving beyond their legacy technology, so copper, and actually removing it from the ground.
Well, let's talk a bit more about the regulation. Obviously, a big part of Chorus being regulated by the Commerce Commission and them setting what you can earn. Can you just talk a bit more about how the regulator currently does that and some of the terminology that we hear, such as MAR?
The MAR, the RAB, there's the telco industry is renowned for its acronyms. Absolutely. So the RAB is our regulated asset base, right? And which is essentially the capital that's been spent on the network. And Chorus to date has spent around $5.5 billion on building this amazing network. So that's essentially the foundation of our RAB. Now, there's a very complicated formula that then the Commerce Commission will work out what the MAR is, the maximum allowable revenue. But essentially the regime, the regulated regime, is set up in order to provide a greater degree of certainty and that Chorus can earn a regulated return on that capital investment. But that complicated formula will take into account a whole bunch of drivers, such as your capital spend, your depreciation profile, your WACC, your asset beta, your leverage, your tax building blocks. So, and what it will do at the end is essentially spit out a number that would say, based on your regulated asset base and what you've spent, this is in theory the maximum allowable revenue that Chorus could earn over a period. And that's probably where there's a secondary complication to it, because Chorus is subject to defined regulatory periods. So our first period, PQP1, was only 3 years long, ran from, or it's finishing at 2025, so 22 to 25, or end of 2024. So that sets it for a 3-year period. And actually Chorus now, for the last year and a half or so, has been in this process of doing a submission for our second regulatory period, PQP2. We've had earlier this year, our allowances have been determined by the Commerce Commission. So that sets an envelope for our operating costs and our capital costs. And then we have our MAR determination, which is due to come hopefully in early December. And that'll again set the framework out for that MAR across what will be a 4-year period. So this will run from 2025 through to the end of 2028.
You've called for deregulation in the sector this year, and when I think about it, when we look at the likes of Spark and 2 Degrees and One New Zealand, they all run their own mobile networks. So as you pointed out earlier, you are definitely subject to competition, at least at the margin. And if you're a household where you're not streaming lots and lots or downloading lots and lots, then probably using the mobile network is a viable option. And then you've also got Starlink and the likes of those other players coming in as well, which is a bit different to I guess other industries or other companies that are heavily regulated, like an airport or a telco line, that you are facing competition, and yet still the Commerce Commission determines what you can earn. If the industry was deregulated, how would consumers ultimately benefit from that, do you think?
Well, I'd point to the Commission earlier this year having done a review of fibre deregulation or fibre regulation, as it is, and not seeing enough of a change where you'd say actually they're going to step into an investigation. So, when I call out regulation and deregulation, from a fibre perspective, I think Chorus is subject to a lot more stringent regulation, even compared to the other local fibre companies. There are 3 others through the country. Chorus has the majority of the fibre infrastructure, but we're already doing a lot more than they're having to provide under our regulatory regime. And then you're right, Susanna, you call out from a mobile perspective, there's essentially not there. We don't have the same constraints or regulatory requirements in a wireless world. So it is quite different, and it's something that we'd like to see, given competition, that starts to actually even out. At the same time, there's a certain degree with fibre regulation that it does provide greater certainty about that framework, so that we've just talked to a regulated framework as well. So, from a consumer perspective, it would be a fundamental change, right? Because at the moment, Chorus can't retail, so we have our entire framework's based off being a wholesaler and working with the retail service providers. So changes to deregulation in fibre, we'd probably push in the first instance that we're at least only subject to the same regulations that the local fibre companies are. Beyond that, there's regulatory obligations that we have around service, availability and performance. And the fibre network, by the way, is the only broadband technology that is regulated to have more supply than there is demand, which is why there's almost this loop of capital investment required, because our usage just continues to grow. But Chorus is the only one that has that. You think about that from a customer experience perspective. I don't know about you, but my kids at home pretty quick to tell me when they think the Wi-Fi is not working and the broadband's not working, which they can't understand why when their dad does what he does. So anyway, that's a different story. But yeah, you don't have that same kind of conditionality in a wireless world.
Yeah, I was thinking a bit about, with broadband, we continually expect more for less. Every year we expect faster times and more without actually paying a higher monthly bill. So with that in mind, how do you think about growth going forward outside of population growth? What are some of the other drivers that can help sort of grow the industry?
Yeah, let me pick up first on the data point, because I find this quite fascinating, and it goes back to your opening question around why this industry, because I love how dynamic it is. And having access to high-speed fibre connectivity has fundamentally changed the way that we all live, learn, work and play. And we saw that even more so during the pandemic for COVID, and being at home, heavily restricted, but still actually being able to work and live and order takeaways and get them dropped at your door. But it's fundamentally changed the way that we live. So, even though it might seem like we're providing the same sort of service as we were back when Chorus first started with the UFB initiative, it's fundamentally changed. To give you another statistic, 10 years ago even, the average data usage in New Zealand per month was 40 gigabytes. It's now over 600 gigabytes. Yeah. We now do the annual usage from 10 years ago in just over 2 weeks. Right. And again, I'd say that's a pump for the fibre network, because that shows again how scalable it actually is.
Yeah.
Right? And it's built for that future again. So, it's something that when you look at the use cases of where that might grow, yes, the rate of growth might change and oscillate, but I don't think it's ever coming down. Right? So, and you think about where some of that growth might be, because that speaks to the industry. As terrestrial TV increasingly and most likely comes to an IP solution, as we get to 4K mass market, and what I mean by that is, even though 4K has been around for a while, not every household has 4K devices, and not every household is actually consuming 4K content, right? At the moment, we have, I think, on average the average is now 26 devices connected in our home, which seems crazy, right? But if you actually add them up and you think about the laptops, the iPads, the wearables and watches,
Smart
the TVs,
fridges.
the smart fridges, ordering your milk for next week, the security, all your other appliances, it's really not hard to get to 26. And that's only forecast to grow, even over the next 5 years, to up to over 40 devices. So there is growth and scalability in the fibre network itself. In terms of where the growth for Chorus comes from, one of the things Chorus is doing now is we're in this transition from what I've termed as Chorus as the great network builder to now transitioning to being Chorus as the great network operator. And the fundamentally different capabilities and mindsets, but largely the UFB program has completed. All right, we're past the peak of installs. Competition and technology is advancing. The government, regulatory and economic frameworks are evolving, as are the expectations of Chorus's shareholders and other stakeholders. So we need to move as well. Now, part of that shift to becoming a great network operator is restructuring our teams and the way that we work to more of a matrix model. So thinking more of we have 3 value streams now, which is principally access. So how do we keep growing into our base? We're currently at 72% uptake on all of the premises that we've passed with fibre. We want to grow that to 80%, and we see pathways to actually achieving that. In infrastructure, it's our second value stream. This is a new stream. So it was largely passive previously, but thinking more backhaul, wireless co-location revenues, other infrastructure style revenues that have now got dedicated resources, prioritisation and investment to actually drive growth and really leverage the core assets that Chorus has, because they are amazing. And you probably won't appreciate this, but Chorus is actually one of New Zealand's largest property owners. We have over 600 exchanges throughout the country, thousands of those cabinets that we're now busily putting all this beautiful artwork on with local artists. We have over 200,000 light poles, or poles that have, half of which have fibre and power running to them, an awful lot of copper in the ground, and about 1,200 odd high sites. All of these things are property that, reimagined in a different way, actually create an opportunity for Chorus to think about these assets in a different way, leverage them more effectively with our core to what we do, or divest from them as fast as we can. And then that third value stream is what we call frontier. And that's essentially about accelerating our exit from copper. And we want to do that by 2030. We need to put a date on that and work backwards on what it is we need to believe. And then equally, as we've talked a bit about fibre expansion and how do we step into that in a way that has broader industry engagement, and again, looking back to a public and private partnership with government.
You recently announced a dividend policy that dividends would grow with inflation. What are the levers that you need to control in order to be able to achieve that?
Yeah, so we earlier this year we did a reassessment and a reset of our capital management policy, and yes, the core pillar of that was around having a growing, sustainable dividend, at least at the rate of inflation. Now we see that's achievable through the changes that we're making, a lot of which I've just spoken to. Those stepping into where those growth areas actually are. So 80% uptake, becoming an all fibre business, focusing on property optimisation and other efficiency. There's opportunities for us to grow into that, and that's where that dividend growth we see coming from. But we certainly see Chorus as an essential digital infrastructure provider, right? And we can talk about the criticality of it and how we all use our fibre connections today. But that dividend policy and our capital management framework was essentially about us having greater confidence in our cash flows, greater certainty in our regulatory environments. As I said, we're transitioning now to be that great network operator, so we've passed the peak of installs, subject to something else happening that would enable further expansion. So we have that greater degree of confidence when we look out to the future.
Now, we can't talk about technology without mentioning AI. You talked a bit about the demand curve and, demand's only going to increase. Maybe the rate will slow down, but definitely expecting that demand will continue to go up. What, if any, impact do you see sort of this AI wave that's happening play on that demand curve?
I think it's the next wave that's going to fundamentally change the way we live. Which is a little scary when you could spend the entire day literally just reading AI articles. And I think we've got to be careful too, because AI has been around for a long time. And even from a chorus perspective and running the network, there's a lot of AI in network that actually is from an optimization and efficiency perspective and making sure the experience that you have at home with your fibre connection is amazing. Right? It's generative AI that I think has the market all crazy and thinking about the applications for that, and like LLMs, with the large language models. And New Zealand, I think, represents a potential opportunity, particularly for data centres and data connectivity from a global perspective as well. I think we've got, the last stats, we have over 50 data centres throughout New Zealand as well, and there's been a couple of examples that have announced AI training centres and trying to establish those in New Zealand because of, in part, cost of land and access, and equally just thinking about the connectivity and connecting back up to the world. But in general, I think it's a watch and see. I think the pace of change that we're seeing, it's a little scary, but I think it will be that next wave that fundamentally changes the way we live.
And in terms of just going back to earnings and the regulation by the Commerce Commission, are there any parts of your revenue that are not regulated?
Yeah, about 20% at the moment. So when I talk to that infrastructure stream, so backhaul, co-location, other infrastructure style products. So I think Chorus roughly is $1 billion of turnover. About 200 million of that's actually in regulated revenue, so the non-fibre. So obviously that's copper as well at the moment, but that is increasingly on the decline.
And do you see that 20% number increasing then over time?
It has to, honestly. There's part of establishing that value stream for infrastructure was around leveraging our core assets more effectively, being one of New Zealand's largest property owners, recognising those 50-odd data centres even, the connectivity that we get between those data centres and back out over the world, and what's the role that Chorus actually plays in that. Even from a competition/partner perspective with 5G. 5G, when it's truly working as standalone 5G, which is a different standard of it, which we don't have in New Zealand yet, but if and when one of the mobile operators actually gets to that standalone, that's true 5G, running at network edge and network slicing for dedicated enterprise networks. But by the same token, you'd still need the backhaul for the fibre network to actually make it be as amazing as it could be.
That's where you come in.
Absolutely.
Well, I think we're almost at time, but before we wrap up, I'd love to ask one more question. We are living in a very connected world. Obviously, connectivity is really, really important for all sorts of benefits, some of which we spoke about today. But also disconnecting is really important as well. So how do you like to disconnect?
Great question. I'm really big on family, so spending time with my wife Kate and our 5 children is really important. And we started our session talking about the last couple of decades that I've been involved in the telco industry, and actually I've been doing this for probably almost those 20 odd years. But when I'm on leave, I disconnect as much as I can. I love being out in nature. We have so many amazing great walks around New Zealand, and it's amazing to just be out and disconnect and be a lot more mindful about who you're with, where you are. We have such a beautiful country, and I've been fortunate to live in a number of others, but home is home, and we should treasure that. And as much as I'm in the telco industry and have been for a long time, I love disconnecting away from it as well.
I agree. Well, thanks so much, Mark, for being on the show. We learnt so much today, and I really appreciate your time.
Thank you. You're welcome. Thanks for having me.
Thanks for tuning in. You can watch Shared Lunch on YouTube, or you can follow us on your favourite podcast app. Have a great week.